Hello and welcome back to my YouTube channel. If you are watching this video for the first time, please take a minute, subscribe to my channel, give the video likes, and put your comment, share the video, let it reach many people. So we'll continue with the revision of the April 2025, and today I'll do question 21, and I'll read the question straight away. The following financial statements relate to Z Limited for the year ended 31st December 2024. You are required to prepare the forecast financial statements for the next 5 years, commencing 2025, given the following assumption. For the statement of profit or loss, assume that revenue and purchases are expected to grow at the rate of 10% per annum. So I'll capture that 10% here. Gross profit was 30% of revenue. I'll also do that here. Administration expenses will grow at the rate of 5% per annum. Selling and distribution expenses will likely grow at the rate of 10% per annum in line with revenue. So I'll also capture that information. Depreciation and amortization is on average 10% of the previous period non-current assets. Interest expense is 10% of the end of last period balance of the long-term loans. Then income tax expense is 30% of the profit before tax. Dividends given is 40% of profit before tax. That's okay. Then non-current assets are expected to grow at the rate of 5% annually. Yeah, that's for the statement of financial position. Then inventory is determined from the profit or loss. It's okay. Trade receivables will be 2 months of the credit sales. That's okay. Cash at bank are expected to grow at 50,000 per year. 50,000 per year. Share capital and share premium will remain constant. That's okay. The long-term bank loan will be the balancing figure. Okay. Trade payable 2 months of purchases. That's okay. Tax payable is 60% of the tax expense. Yeah. Then share price is expected to grow at the rate of 5% per annum. Yeah. That's all. Yeah. So required the forecast of profit or loss for the 5 years from 2025 to 2029. Then B, the statement of financial position for the 5 years from 2025 to 2029. Yeah, so I'll go away straight away and I'll do my question here. Yeah, so I don't know. Let me do my workings down here. So I'll start with the forecast. Forecast statement of profit or loss. Yeah, so this year we start with 2025. Then I'll fail. Let's go to go to series. Step value will be 1. Then I'll end in 2029 for the 5 years. Okay. Yes, let me see if I can reduce the size of this column by increasing that a little bit. There is one here. Also increase that. Yes, after that now I'll bold. Then I'll create the bottom border. The shillings were in thousands. If I'm not wrong, yeah. So I'll copy and paste everything under the statement of profit or loss from revenue all the way. So Control C. Sorry with that. Copy all that. So Control C. Then you come and say Control plus V to paste. Yeah, so this is the forecast statement of profit or loss. So I'll also bold that. Then I will merge and center. Okay, yeah, that's now okay. Let me extend this a little bit. Yeah, so I'll do the same, the forecast statement of financial position, yeah, for the financial position. Forecast statement of financial position. Yeah, it starts from also 2025. But here, just come and copy that, then you drag all the way to 2029. Then I'll highlight that, bold it, then merge and center. Then I'll also bold that. Then create the bottom border. The shillings are also in thousands. So just come up here, you copy that, then you drag. Yeah, from there you drag, it will capture everything. And that's okay. So I'll go to control and I'll copy, yeah. I'll copy this information under that. That's okay. So control C. Then I will say control plus V. That's okay. That's okay. That's I think is okay. So we'll start. So I'll start with the revenue. Revenue and purchase are expected to grow at the rate of 10%. Yeah. So I'll come to revenue. Yeah. So I'll use the previous year was 2024. Yeah. So I'll pick that to multiply by bracket 1 plus the growth rate, which is 10%. And already the growth rate is here. Yeah. So I'll lock it completely because the growth rate of 10% will be constant throughout the forecast period. Yeah, so that's why I had to lock it. So I'll do that for the second. Yeah, because when you lock for the first one, it will give you 0, 0, you see? Yeah, so you undo that. You undo. Yeah, so you undo that. So I'll do again for this. I'll say equals to, for 2026, it will be that times bracket 1 plus the growth rate, which is still, which is still 10%. Yeah, and I'll also lock it for the second time completely. You lock that cell with the growth rate completely. And you enter. Then from there, you just drag all the way to 2029. So the next item will be cost of sales. So we have the opening inventory. So where's the opening inventory? So there was no forecast for inventory. So we know that the opening inventory for 2025 will be the closing inventory for 2024. So the closing inventory, we'll get it on the statement of profit or loss or the statement of financial position. So I'll just come here and pick this. Yeah, that was the closing inventory, 660. Then you purchases. Yeah, purchases we forecast. Yeah, so you go to purchases. Yeah, so use the 2024 value. I hope it's this one. No, oh, this is the purchases, huh? Which is which? This one, huh? I think it's this one, yeah. Yeah, so that will be the purchases. So you select it, then you multiply by bracket 1 plus the growth rate. The growth rate we are told under information number 1 that for revenue and purchases, they're expected to grow at the rate of 10%. Yeah, so you select that 10% and I'll lock it again. I'll lock it again. I'll lock it again. And I'll do the same for the second year. So I'll pick the previous year, 2025. I'll multiply by bracket 1 plus the growth rate, which is 10%. And I'll also lock it once again. Also lock it. I'll also lock it, then I'll close the bracket. And yeah, let me just say yes, sir. No, that's not right. So I'll pick this times bracket 1 plus the growth rate, which was 10%. I'll lock it again. Yeah, then from there you can just drag and you'll get that. So we go to closing inventory. Yeah, we told that the gross profit will help us to calculate the closing inventory. So we told that gross profit is 30% of the revenue. This will make it easier to determine closing inventory. Yeah. So just equals to 30% times the revenue. Yeah, so it will be all that way throughout the process, throughout the forecast period. Yeah, so I'll lock that 30% completely so that I can drag. Yeah, so that I can drag it. Enter. Yeah, so that will be my not close. Sorry. Let me undo that. Yeah, that's gross profit. Yeah, so the gross profit will be 30% of the revenue. So we'll take that 30%, you multiply by the revenue. But remember, this 30% will be constant all through the forecast period. Yeah, so I'll lock it completely. So once you lock it, you'll get that value. Then you drag. You drag. Sorry, we continue. So yeah, now I have what we call the gross profit. So from gross profit, I can be able to get the closing inventory. But first, I'm supposed to get the cost of goods sold, which is opening inventory plus purchases less closing inventory. So I'll just come here and say gross profit is always revenue minus cost of sales. And the cost of sales is what is missing. And I have revenue and gross profit. So you just take revenue and you subtract. Sorry, you take gross profit and you less revenue. Yeah. So once you get that, then closing inventory, you'll say equals to, yeah, I'll introduce a negative sign because it's negative as per what we are given. So I'll say bracket, so I'll pick this plus this plus this. Yeah, you are making the closing inventory to be the subject of the formula. Yeah, so then you enter. Yeah, so you'll get 781, which is negative, as the gross, as the closing inventory. So even when you try, when you say opening stock is 660 plus purchases less 781, you'll get 3465 as the cost of sales. Yeah. Yes, I can do it here, you see. Yeah, that's how you reason by making this the subject of the formula. So cost of sales is opening inventory plus purchases less closing inventory. So I'll just say equals to this plus this. Now plus this, because it's already negative, I just add it. Yeah, to mean minus. Yeah, so to give you 3465. You see this one? Yeah, as the cost of sales. Yeah, so that's correct. So I'll delete it. So you just have to make this the subject to get the closing inventory. So once you're done with that, I'm done with that for the first year. That's 2025. So we continue. So we go to other expenses. Yeah, I'll come to this. Yeah, I'll just be able to refill this. It will be easy. Yeah, or let me go to this. So opening inventory here will be what? Will be the closing inventory for 2025. Yeah. So I'll change it to positive. So I'll say equals to negative. Then I select that. Yeah. So once you select that, you have that. Then now I think you can just drag. The formula might have been captured. So when you drag that, you'll get that. as the cost of goods sold. Then you also drag here, to get the closing inventory now for this. Yeah. So that when you take this plus this minus this, it will give you this. Yeah. So that's how you are supposed to handle that. Yeah. So I can continue. Yeah. So I'll do the same for this so that I just finish. Yeah. So I think at this point I can just drag the closing inventory from here. I hope it has copied. Yeah, you can see it has given me 914.10. Yeah, then you just come here and drag. You can drag from both ends. But when now you come to drag this, no, let me undo that. Let me undo that. Let me delete this. Yeah, so we have that. So I'll start with this because this was the first formula. So I'll drag this, to give me that value, correct? Then I'll also drag that. Yeah, you can see the closing inventory. It keeps on increasing. Yes, I'll do the same here for the opening inventory for 2027. I'll drag this, and you see it's giving me 10. That, yeah. So once you do that, you come here and drag this for the cost of sales. So once you have that, you just drag this. It will factor that at the value. Yeah, and the journey continues. I'll also drag that. Yeah, then I'll drag this one. Then once you are done with that, you just drag this as the last sort here. Yeah, so you can see now we have the closing inventory. Yeah, so I'm done with that section. Yeah, so I'll go to other expenses. I'll go to administrative. I'll go to administrative expense, and we're told that administration expense will grow at the rate of 5% per annum. So I'll go to the previous year. Administrative expenses was this. That was that value there. So I'll multiply by bracket 1 plus the growth rate, which was 5%. Yeah, so that 5%, I'll lock it completely because it will be constant all through. Lock it completely because it will be constant all through. I don't know why it's giving me a minus. Let me delete that. Let me see it again. Equals to. Yeah, sorry. Before I put, let me have this 5% because I can see it's marked by something. Let me see if I can place it here. The underline. Yeah, I'm trying to do away the underline. 5%. Yeah. Or I can just highlight this and I remove the bottom double border. No, it's giving me that. Let me undo that. Yeah, let me also take this 10%. Yeah, just to save on time. Also this 40%. Yeah, because they're highlighted. And I don't want to go back. Yeah, so that's okay. That's okay. So I'll do that. Now we'll go. Administrative expenses equals to, for the previous year, which is 2024, it will grow to 210. You will multiply by bracket 1 plus the growth rate, which is 5%, and I'll lock that 5% completely. Then you enter. I don't know why it's giving me a negative, that a value. Let me place, number is telling me 00. Let me do the setting. Let me see. Why is it giving me? Well, let me do it again. Or is it not capturing that? Administrative expenses, it's 210. So it was 210. This should be captured. I don't know why it's not giving me the values. Times bracket 1 plus the growth rate, which is 10%. Sorry. For admin, it is 5%. And unlock it. We'll also lock it completely. Then I'll close the bracket. Then I'll enter. I don't know why it's giving me the negative. Let me just do the next one. So I'll pick also that times bracket 1 plus the growth rate, which was 5%, that one. And I'll also lock it completely so that I can drag. Yeah. Yeah, so from there you just drag. I don't know why it's not giving me the values. I don't know why it's not giving me the value. Let me see if maybe it was a settings. Uh, let me just let me go to distribution. Yeah, so selling and distribution expenses will likely grow at the rate of 10% per annum in line with revenue. Yeah. So selling and distribution, so it means that those are the distribution expenses. So I'll also do that forecast. So distribution expenses, we have that 210. You multiply by bracket 1 plus the growth rate. And the growth rate for selling and distribution was 10%. So I'll lock it again. I'll lock it again. And I'll enter. Yeah, you can see this is now giving me that value. Yeah, I don't know why for administrative is not responding, but I'll work on it. Yeah, don't worry. So I'll do the same with that. I'll multiply that by bracket 1 plus the 10%, which is there. And I'll also lock it so that I can drag at that point. Yeah, I'll drag that. So that's okay. That's okay. Yeah, so let me have this to 10 for administrative somewhere here. See if I select it here, it will be able. It was negative. Yeah, let me just say negative 210. Yeah. Yes, I'll repeat it here. So I'll say equals to that times the growth rate, bracket 1 plus the growth rate for administrative was 5%, that one. Yes, I'll lock it completely. Lock it completely. Then you close the bracket and you enter. Yeah, you see now it's giving me that value. Yeah, and these other ones will now also appear automatically. When you click this, you will realize this B103, which is this one here, times 1 plus A68 locked. Yeah, so that's okay. Yeah, that's how it was supposed to be. Okay, so we continue. So earning before interest, tax, and depreciation and amortization. Yeah, this is something that we are going to calculate. So you take gross profit and you sum. Yeah, so from gross profit all the way, yeah, you just come here and auto sum. So we'll have that value. Uh, Let me do this. Yeah, I don't need that. So you just drag up to the last year and to get your values. Yeah, I'll create a top border that way. Okay, so depreciation and amortization. We are told something about depreciation and amortization. Yeah, so I'll say equals to, then I go to the assumptions. Depreciation, sorry, and on average 10% of previous period non-current assets. Yeah, so it's 10% of the previous period non-current assets. Yeah, so I can't go beyond that before. Now I'll have to come to this forecast, yeah, so that we can go back there and be able to determine. So I can only do for 2025. Yeah, so for 2025, I'll say equals to, it is 10% of the previous year. Yeah, so depreciation is 10%. Take that, you multiply it by the previous year. The previous year was 2024. So you go to 2024, statement of financial position, and you look at the non-current assets here. Yeah, this value. Yeah, so the depreciation was 10% of the previous years. Yeah, that way. Yeah, so let me see. Was depreciation given in negative as an expense there? Yeah, you can see it's negative. Yeah, so I'll introduce a negative sign there. Then I'll enter. Yeah, so I have that depreciation. Okay, so you have that. So earning before interest and tax will be the sum of these two. You just auto sum. Let me do with that underline. Yeah, so I'll highlight all this. Then I'll create a top border. Yeah, so that it helps in saving time. Then we now have earning before interest and tax. So what is the interest expense? Yeah, yeah, there was something on interest expense. So number 6. Interest expense is 10% of the end of last period balance of the long-term loan. Yeah, so just equals to 10%. You take the 10%, you multiply. 10% you multiply by 10% you multiply by the last year loan. Huh? So last year was long-term loan was 2024. So we continue. So we'll have the 10% times, yeah, it was for the previous period. So we look at the long-term loans. Yeah, long-term bank loan was 1,300, that one. Huh? Yeah, and you enter. Yeah, so it's an expense. So I'll put it as a negative. Then you enter. So earning before tax will be the sum of these two. So you sum that. Let me remove this. Huh? Uh, remove the board. Huh? Yeah, so income tax expense. So what is the income tax expense? Yeah, we were told that income tax is 30% of the profit before tax. So this earning before tax will take 30%. So you say equals to, yeah, already it's here. So I'll take that 30% and I'll lock it because it will be constant all through. This helps you in saving time. Yeah, instead of calculating one by one. So I'll multiply this by the earning before tax, which is that value there, the 660. So I'll click that just to remove that error. So, and because I've locked it, let me just drag for this other year so that when I enter this, it will multiply automatically. Saves time. So after earning after tax, which is the net income. Yeah, and sorry, this was an expense. So I'll put negative here. Income tax expense. So we'll have negative that. So I'll drag that. So it will capture that negative. Yeah, so earning after tax will be the sum of these two. Let's say auto sum. 462. Then dividends paid. Yeah, we were told that how much was being paid for dividend. Yeah, so dividend is given 40% of the profit after tax. Yeah, so you say equals to 40%, but you lock that 40% completely. You lock that cell completely because it will be constant all through. it will be constant all through. So you multiply by the earning after tax, the net income, that one. Yeah, so dividends, I think, is also is deducted. Yeah, I think it's deducted. Dividends paid, yeah, it's negative. Yeah, so I will want it to appear also negative. Then you enter. So because I've locked the rate, so I'll just drag so that when we get those other values, it will come automatically. Therefore, the retained profit for the period will be the sum of these two, yeah? After you have paid dividends, that's the retention. And that retention, we also told that it was 60%. Yeah, it's automatic because the 40% has gone, so the what remain is 60%. You can take 60% of earning after tax, but there's no need. You just add those two, yeah? Yeah, you just sum these two, get the correct answer, yeah. Then you drag, yeah, so that when you enter this, these are the values will fill automatically. Okay, I think they even talk about it, huh? Dividend. No, sorry, there was no information on that. Yeah, but that one you just have to use your knowledge. Yeah, yeah. So return profit brought forward is the return profit carried forward for the previous year, that is 2024. So what is the return profit carried forward for the year 2024? Return profit carried forward is this one. This one here, 800. Yeah. So that's what you capture there. Yeah, so that you get the return profit carried forward. I don't know why it's giving me 0, 0. Let me see. Equals 2. It is this one here. It is 800. I don't know why it doesn't copy. Let me see if I sum this 2. It's giving me negative. There's a problem with the person who shared this Excel with me. Yeah, maybe. Yeah, so what I will do, I'll pick the 800, which is on the statement of, or I can just put it. You just write it manually. Yeah, there's no big deal if it has refused to copy. So that now I can get the return profit carried forward. Yeah. So you sum this also. Yeah, so that's the return profit carried forward. So I'll drag that so that it copies the formula. I'll drag it all through. Yeah, and I'll create a top border, then create a bottom double border that way. Yeah. Yeah, so I'm done with analysis of 2025. Yeah. So now, because we are told the analysis stop at depreciation, which I must have the non-current assets for the previous year. So I'll go straight away. Yeah, I'll go straight away to forecast on financial position. Yeah, that's how you do these questions on forecast. Yeah. Yeah, so I'll start with the non-current assets. Yeah, so the non-current asset, let me see, they said non-current assets are expected to grow at the rate of 5% annually. Yeah, so for the previous year, non-current assets was that. So I'll multiply that by bracket 1 plus the 5%, which is the growth rate, this one. Yeah, and I'll lock it completely. I'll completely lock it. Completely lock it. Then I'll do the same for the next year. Pick that. Multiply by bracket 1 plus the growth rate. And the growth rate here was 5%. Was 5%. So I'll lock it. Again, I'll lock it completely. Lock it completely. Let me just say yes. Huh? No. That was not captured correctly. So I'll pick that bracket 1 plus our growth rate was 5%. So you also lock it again completely, not partially. Lock it completely. Enter. Yeah, that. So from there you can just drag up to 2029. Yeah, then we go to, yeah, so we go to inventory. And before we go to inventory, already I have non-current assets. Yeah, so I'll go back. Yeah, I'll go back now to depreciation and amortization. So I'll come here and say equals to, we are told that depreciation and amortization are what? Depreciation and amortization averages is on average 10%, is on average 10% of previous period non-current assets. So 10% of the previous period, yeah? So say you take 10%, yeah, that 10% of the previous period. Yeah, the previous period is 2025. So 2025, yeah, we are in 2026, so the previous period will be 2025. Yeah. Yeah, it averages that, yeah. So once you have that, earning before interest and tax, so I can just drag that. Yeah, that's correct. Then interest expense was yeah, interest expense was what? Let me see. Interest expense. Interest expense is 10% of the end of last period of the long-term loans. Yeah, the last period of the long-term loans. Yeah, remember we don't even have the long-terms loan yet. Yeah, so I'll leave it there. So I'll go back. I'll continue with analyzing my forecast statement of financial position. Yeah, so that now we can come back and get the interest expense. Yeah, because we don't even have the statement for 2025, so that I get to know the long-term bank loans, which is a balancing figure, we have been told. Yeah, so we continue. So I'll go to inventory. So here we always have the closing inventory. Yeah, so the closing inventory for 2025, I think that one I can get it from, yeah, from here, yeah, from the statement, forecast statement. So the closing inventory, yeah, well, that's what we use. So this for 2025, it will be this, 2026, this, 2027, all the way to 2029. Yeah, because that's the inventory that we always have on the statement of financial position is the closing inventory. Yeah, so I want them to be positive. So I'll say equals to. Then for 2025 was that. Then I can drag. Yeah, yeah, they're all positive. Yeah, yeah, that way. Yeah, those are the closing inventory. So trade receivables, we were told something about trade receivables. We are told that, yeah, we are told inventory is determined from the profit or loss. Yeah, that's why I've captured them from the profit or loss. Then trade receivables will be 2 months of credit sales. Yeah, where do we get the credit sales? You know, there's an assumption that credit sales are always determined by trade receivables. Yeah, but you see now here we are not given trade receivables. Yeah, and again, here we are not told. Here under revenue, you have sales of goods. So they are not specific that there's a percentage that takes credit or, yeah. But now we assume, yeah, because this focusing is all about assumption. So we assume that all this revenue from sale of goods are on credit. Yeah, so this is what you do to calculate, because we are told that trade receivables are 2 months. Yeah, I've said that, sorry, trade receivables will be 2 months of credit sales. Yeah, so your sales, yeah, for 2025, what was my revenue? Yeah, so my sales for 2025 was 49.50. Yeah, and remember, 2025 have 12 months. So this is what you do. You'll come here to calculate trade receivables. Yeah, and I've said you assume that those sales were in credit because the examiner have not specified. Yeah, so you can't calculate yeah. So you assume all the sales made were on credit. So you'll take 49.50. You divide by 12 months. Yeah, so that you get for each month. Yeah, because we are told that trade receivables are 2 months of credit sales. So you take the total amount, you multiply by, you divide by 12, then you multiply by 2 because it's only for 2 months. Yeah, yeah. For that case, then you enter. So trade receivable here will be 825. Yeah, so you can do the same for this. You can do the same for this. So to save on time, yeah, let me just do it because that's 12 and 2 months. I could have locked them. It will be okay. Yeah, so for this one also, for 2026, I will pick these cells. I'll divide by 12. Then I'll multiply by 2. I'll do the same for this. Take the revenue for 2025. Sorry, 2027. My revenue was that. I'll divide by 12 months. Then you multiply by 2 to get trade receivables. Yeah. Then for 2028, the same. Our revenue was this. Then you divide by 12 months, then you multiply by 2. Yeah, because it was a 2-month. You enter. The same you do with that. Lastly, 2029, our revenue was that. You divide by 12 months, then you multiply by 2. Yeah, simple as such. Then you have the trade receivables. Then cash at bank and don't know whether there's provision for that. Cash at bank are expected to grow at shillings 50,000 per year. Yeah, so for 2025, I'll add, yeah, I hope I have that. So I'll say equals to the 2024. What was the cash? Cash at bank and in hand, it was 140. Yeah, that one. And I don't know why this. Let me see if it will agree to capture. So I'll add, yeah, you just add 50,000. And because we are told that they will grow at 50 per year. So it means that they will increase with 50,000 per year. Yeah, so it will give me 50, 140. Let me see. What was the original amount? Just to be keen, it was 140. Oh, yeah. You remember these are in thousands, yeah? These are in thousands. Sorry. Let me undo that. Yeah, so it will be equals to that 140 plus 50. So this is supposed to be 50. Let me delete that. This is supposed to be 50 because I'm dealing with the values in thousands. Yeah, so it will be equals to, yeah. Remember, if you do such a mistake, then you won't get it correct. Yeah, so you say equals to the previous year, it was cash was how much? Cash and bank was 140. You add 50 because it's growing at 50 per year. So it means that every year there's an increase of 50,000. So you add that 50 or 190. That makes sense. Yeah, so for this also it will be 190 plus 50. Yeah, so you can even lock that cell with 50. Yeah, so let me delete this. Let me delete this. Let me also delete this. I'll say equals to 140. Because this paper is all about speed. Yes, I'll take 140 plus. It was plus 50,000. 50, but that 50 I'll lock it. Yeah, lock that cell with 50. See. Yeah, so it's 190. So I'll also do the same with this. I'll take 190 plus that 50 and I see if I lock it, it will be able. $sign, dollar, enter. So it will give me 240. Then I can just drag. Yeah, you can see now it's 290, 340, 390, an increase of 50. I do it that way. So my total current assets will be equals to, what will be my total current assets? So my total current assets start from here, from inventory. So sorry, I was not even supposed to say equals. Let me just sum all this up to there. Yeah, you get that. Then you drag. Yeah, you can create borders, and even if you don't create borders, there's not a problem. So my total assets now will be the total non-current assets plus the total current assets. Yeah, the non-current plus total current assets that way. So I'll highlight that and you drag. Then now you create the top border and you create the bottom border. So sorry. Let me undo my bottom double border. Yeah, so that's okay. So I can even highlight this and bold it. Yeah, we know that in financial statement, in the financial position, total capitals and liabilities should be equals to what? Total assets and should be equal to total assets. Yeah, so you type that, you balance it already. Yeah, this will help you now to get those other values. Yeah, yeah. So I'll also, yeah, save on time. Create the top border, then you create the bottom double border. And don't know why let me highlight that again. I'll have top border, then I'll have bottom double border. Yeah, that way. So that's okay. That's not okay. You know that that's balanced. So it will make your work easier. Yeah, this will take you time, huh? But once you have organized yourself, because everything is correct now, everything is correct as per the statement. So this is supposed to equals this. So we go to ordinary share capital, under capital. So what did they say about ordinary share capital? So share capital and share premium will remain constant over the period. Yeah. So I'll just go back to the original ordinary share capital and I'll copy that 850 and I'll drag this to get the share premium because I'm told they will remain constant. Yeah. Yeah. So they will be constant all through. So it means that nothing will change. There were no issues of new shares at a premium. Yeah. So at that point, just drag. You do the same with this. That point, you just drag. Yeah, then the return profits. Yeah, so the return profit now will be the return profit carried down for 2025. Yeah, you have it now. So return profit is this, yeah? Return profit carried down for 2025 will be this. Yeah, when you go to the original data, you can see that when they prepared the statement of profit or loss, the return profit was 800 for 2024. And that 800 is what appears here. You see it here? Yeah. So that's what to do. It's the same way. So the return profit will be this 1077. Simple as such. Therefore, you'll have total capital to do the sum of this, the shareholders' capital. Yeah, so you sum that. Yeah, and once you do that, I'll just drag so that when I get this return profit for this, because I'll get it after calculating these other values. Yeah, so yeah, you can see this constant because share capital only is what is captured, yeah? So total capital, I can also create a top border there. Yeah, just to separate that. Then we go to liabilities. So we will have long-term bank loans, yeah? Yeah, so were we told anything on long-term bank loans? We are told that the long-term bank loan will be the balancing figure in the statement of financial position. Yeah, so we leave it. We leave it. We look for other values because it will be the balancing figure. So we go to trade payables. So what do they say about trade payables? Trade payables are 2 months of purchases. Yeah, so you go to purchases. I've said equals to 2 months of purchases. So where are the purchases here? So purchases are here. For 2025, our purchases is this. Yeah, so it's also 2 months. So I'll divide that. This for the whole year. So I'll divide it by 12 months. Then I'll multiply by what? By 2, because we are told that there are 2 months of purchases. Then you enter that. Then I'll just do the same for 2026 again. My purchases was that. I'll divide by 12 months. Then you multiply by 2. You enter. Then I'll do the same for the third month. For 2027, my purchases for 2027 will be that. You divide by 12 months, then you multiply by 2 months to get the trade payable. Then I'll do the same with 2028, my purchases for 2028 was that. You divide by 12 months, and you multiply by 2. Then you do the same, lastly, with the value for 2020. Our purchases, the last purchases was that. You divide by 12, then you multiply by 2. Yeah, so you're done with the trade payable. Then tax payable, what are we told about tax payable? Tax payable, we are told that tax payable is 60% of the tax expense. So what was the tax expense? The income tax expense. Tax payable is 60%, yeah? So you just come here and say equals to, where is that 60? I just want to select it. Yeah, so you take 60% of the tax expense. So where is the tax expense? So we are in 2025. So our tax expense for 2025, earning before tax, income tax expense. So it is this one. Yeah, and because I want it to be positive, yeah, that's the income tax expense. So what I will do is this, this 60% will be constant throughout the tax payable. So I'll lock that rate completely. Then I'll enter, that's the tax payable. Yeah. So I can as well drag, the total liability will be long-term bank loans plus trade payable plus this, yeah. Yeah, but we know now that total capital and liabilities is equal to 4358. Yeah, so let me get the total liabilities first. So can we get it? Yeah, so you take this, yeah, because that's the total between capital and liability. You subtract what? You subtract the total capital, which we have that value there. Yeah, now we have that. We have total liability. So we can get the long-term loan. So just come here and say equals to, the long-term loan will be equals to total liabilities minus this minus tax payable. Simple as such. Yeah, so therefore the long-term bank loan for 2025 will be that value. So now that we have the long-term bank loans, now we can go back now to interest expense. Yeah. So our interest expense will be equals to, we were told that the interest expense was 10% of the end of last period balance of the long-term loan. So I'll just take 10%. And I'll multiply, yeah? I'll multiply that with the 2025. Remember, I'm in 2026, so the last year long-term loan will be, bank loan will be what? Will be this one. Yeah, it's 10% of that. Yeah, and I'll put a negative. So I'll enter, that will be negative. Yeah, so from here, now I can be able to get earning before tax. I'll just drag that. Then you can see income tax expense is already calculated. Yeah, then earning after tax, I'll just drag again. Yeah, I think I just have to drag it up to the end so that it can be able to, it will copy to just enter. Yeah, so we have that. Then dividends paid already has been was captured, yeah. Then return profit for the period will be 306. Yeah, so return profit brought forward here will be what? Will be this, carried forward for the previous year. So I think if I drag this, sorry, let me undo that. Yeah, so it will be this, let me copy this. Yeah, that will be the return profit brought forward. Therefore, the return profit carried forward will be 1383. So once you have that, you just go back to the financial position. Yeah, because what was missing was what? Was this 1383. And I can just drag it here now. Yeah, you see it's giving me 1383. So once it gives me that, tax payable, what am I supposed to calculate now that I have that? And I have this tax payable was 60% of what? Of the income. tax. So I think when this tax payable, because we are told that tax payable was 60% of the tax expense. Yeah, because I locked that rate. I think I just have to drag. Yeah, I'll have to drag so that it multiply by it's B110. So it's supposed to, the next will be times B. Yeah, that's correct. Yeah, it's C110, huh? Yeah, C110. Yeah, that's correct. Yeah, so now that I have that, I can be able to drag total liabilities. Yeah, because the format will now be there. So I'll drag this first. Yeah, because that was the first approach. Then now, yeah, I can get the long term. Yeah, the work is now easier. Can be able to get data. Yeah, so it's 1662. Yeah, that's correct. That's correct. That's correct. Yeah, so this was C110. Let me see the income tax expense, C110. Yeah. No, this tax payable, it's not supposed to be negative. Yeah, it's not supposed to be negative. Let me put a negative there to change it into positive. Yeah. Yeah, they're supposed to be positive. Yeah, so you can see the long term has changed. Yeah, even this one has changed. Yeah, it has changed because this one, let me drag this also. Yeah, can see 1384, 1385.35. Yeah, it changes, yeah, that way. Because this tax payable supposed to be positive. Yeah, that's correct. That's correct. Yeah. So that automatically changes this, yeah. Yeah. Yeah, so that's okay. So we have that as the now we have the long term, huh? Because this is what we fight for. So I'll go now back to 2020 interest expense. So interest expense again, I will say equals to our interest expense was how much? Interest expense is 10%. Yeah, so I'll take that 10% again and I'll multiply by the previous years. Yeah, so I'll put negative because I want the value to be negative. The previous year now is 2026. So what is the long-term debt for 2026? That's what we multiply this value here. That value there. So you enter. So once you enter, you will have that. So you can drag. Yeah, the earning before tax, you can drag that way. Yeah, and you can see everything changes up to dividends paid. Yeah, so up to dividend paid, it will calculate automatically. Then return earning brought forward. From here now, I can drag this. Yeah, because it's supposed to be 1393. Let me see if I drag, it will give me that 1393. Yeah, it automatically gives you that value. It automatically gives you that value. Yeah, it automatically gives you that value. Therefore, my return profit now for 2027 is what is missing. Return profit for 2027. So I just come here and drag and I'll get that 1870. Yeah, and once I get that value, 1870, now I have my total capital. It's complete. So I just come here and calculate the total liability. So I'll just drag this. Yeah, because the formula is already there. Yeah, that means that we are just taking this minus this. And now that I have that, I can now drag this to get. Yeah, here also you can see now again, we have negative and we're not supposed to be having a negative figure here. They're supposed to be positive. So I'll introduce a negative sign here to change that into positive. Yeah. So when you change into positive, you can see it's now 1.195 as a long-term bank loan. It's a long-term bank loan. Yeah. Okay, we continue. Continue. Now I have the long-term bank loan as that. So I'll go back to the interest expense. What's the interest expense? Okay, so we love it also. It was how much? Interest expense was 10% of the previous years. So I just take that 10%. Normally by negative because I want that interest expense to be negative. Long term, it will be that. Then I'll enter. Yeah, so once I enter that, you see it changes everything. Yeah, so just come here and drag this. Then I'll go to this and drag the return profit account. I'll drag also that. Yeah, so once you have that, uh, this one is the tax payable. It's something I have to change. So tax payable was 60% of the tax expense. So it's 60% of what? Yeah, so it's 60% of the tax expense. So the tax expense was negative. Income tax expense. Yeah, so it's negative. That's that 388. Yeah. Let me see. This one, I told the tax payable was 60%. Yeah, that's correct. Yeah, you take 60% of, yeah, that this year is 2028 of the income tax expense for 2028, which is 388, according to this calculation. Yeah. Yeah, so it's supposed to be positive there. Yeah, because it's on the statement. Yeah, so once you change it to positive, that's okay. Yeah, therefore, you just drag here to get the total liabilities. Once you do that, you just drag for long term because that's the balancing figure. So once you get that balancing figure, you go back to the interest expense. You go back to the interest expense, yeah. And that's not the last. So the interest expense, we are told it was 10% of the last period. So you take 10% times the last period is 2028, the long term balance, this one. Yeah, and because I want it to be negative, because it's an expense, it's a deduction. I'll put it that way. Yeah, so that's okay. So just come down here and you drag and you'll get the return profit brought forward. Therefore, our return profit carried forward will be 30, 30. Yeah, so just come here, return profit 30. And you can see the pattern. The return profit is increasing as this one reduced to, and yeah, as this one reduced. The long-term bank loans are like there's a repayment. Okay, so once you have that, you just come to total liabilities. That way. Therefore, you just come and drag this because the balancing figure. Yeah. Yeah, that's how you're supposed to tackle that question. That's how you're supposed to tackle that question. So I'll go to the interest expense. Yeah, everything is complete now. Yeah, and you get yourself 20 marks and you get yourself clean 20 marks. You get yourself a clean 20 marks. So this was forecasting. Yeah, this is an area that they will always test it. Yeah, so if you are here for the first time, please take a minute and subscribe to my channel and share the video so that we can reach many people. Subscribe so that I can get to 1,000 subscribers in the next 30 days. So thank you so much and have a blessed evening, morning, or afternoon, wherever you are.